Now for Global Business Updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abati. Good morning, Bimbai. Good morning to all our viewers. And if you're in Lagos traffic right now, I'm so sorry. Just real quick, we're kicking off with Donald Trump. He's going to be revealing the details of the reciprocal tariffs later on today. There is talk that he has finalized. Some reports are saying he hasn't finalized. We'll just see what happens. For right now, everybody's waiting on him. Even his own cabinet members apparently don't know. But 4 p.m., I think Eastern time in the Rose Garden, they will all gather there and he will give us the details. And I understand it's going to be country-specific rather than sector-specific. We move quickly to Nigeria. And of course, you've already touched on the big headlines on the front page of this day newspaper, Nigeria newspaper of record, with President Tinubu shaking up the leadership at the NNPC. But also, both of you already extensively jumped into that, so not much for me to add there. But really, I'm focusing on the CBN, the net FX reserves. This is after we're moving on from here. We're not going to be discussing Mele Kyari, but good luck to him. He did. Okay, well, just to say this, he was very transparent in pushing forward the NNPC earnings. I mean, it was the first time in 40-something years that we finally got earnings from the NNPC. So, he has, Dr. Abati said, 6-year legacy. He did, good on him. Although, you also had your input on the mixed reaction from the markets. But either way, to the CBN, net FX reserves. This is after you back out liabilities, right? 3-year high, $23.1 billion for 2024. You can see 2023, $3 billion. I mean, they were paying out a lot, clearing out the backlogs, doing, FX reforms, and a number of liabilities had to be cleared out. So you can see that low number there. 2022 was 8.1 billion, 2021 14.5. So this again is a testament to what the government has been trying to do on the monetary side in order to restore confidence to the markets, in order to give a reflective, realistic exchange rate. You've seen foreign portfolio investors coming in. This is just a graphical representation of those figures, and you can see 14.9 billion 2021 dropping to 8.19 2022. 2023 is when this administration midway came in, and then you can see the jump. Again, net FX reserves. Gross, remember, this is the number that we've been talking about for quite a while. The gross reserves, again, 40.1 billion for 2024. 2023 was 33.2. So that's essentially just backing out the liabilities. To earnings, we've been talking a lot about earnings, and I did mention last time that we will talk about Fidelity Bank. At the Arise News Women of Impact Gala Nights, we did pay homage to Dr. Nneka Onyeli-Ikpe, Managing Director and CEO of Fidelity Bank. The company has been on a growth trajectory under her leadership. At the gala, I said double-digit growth for the share price, actually triple digits. I need to correct myself. But you can see the earnings here. We talked about the gross earnings, 87.2% growth, 1 trillion. Net interest income, 629 billion, 127% growth. That's the difference between the interest they pay on accounts versus the interest they earn on loans. Total assets climbing 41%. Pre-tax profits, so far, this is the highest percentage increase in pre-tax profit we've seen from any bank so far. Again, that's just talking about the increase year on year at 210%, 385 billion. Profit after tax, 179.6. Remember, they are on course for meeting the CBN thresholds. Rights issue was oversubscribed. They got their eye on tier 1 space. They're doing a lot for SMEs. So, as I previewed, Fidelity Bank, proving that they are, on a strong path under the leadership of their CEO. Shout out to women leadership, by the way. We move on from banking to the consumer goods sector. Unilever, of course, makes personal care, food items and so on and so forth. This was their results for 2024. And again, the recovery story continues, right? So revenues, 43% growth, cost of sales did climb. But you can see that they did have an operating profit reduction, but their profit after tax was up by 79.4%. And most of this was domestic sales. So if you look at the breakdown of their revenues, a lot of it came from sales within Nigeria versus exports. I think about 90-something% of it. Yeah, look at that, of domestic sales versus exports. And then the nutrition segment was the highest, 92 billion. Personal care, 43 billion. Beauty and well-being at 12.9. I think finally, Bua Foods, again, looking at the food sector now, they also had some very healthy results. 1.5 trillion naira in revenues. Cost of sales did climb by about 110%, but their growth profit was healthy. They had an FX loss, but that wasn't even enough to derail the results. Still, pre-tax profit 162%, profit after tax 137%, and their own segments breaking it down as well. It was flour leading the way, 194% increase. There also been sugar has been carrying them, but there was a little bit of a decline year on year in sugar sales. Still 406 billion. Others, it refers to rice and edible oils, 1,600% growth there, and then pasta. And they've grown. They have some deals they've made with some companies to grow their wheat and pasta line. So, and then they declared a 13 naira dividend as well. So, look, the whole point about this is that across the board, banking, consumer goods, food, you are seeing a recovery so far this year for Nigerian companies.
Which is incredible, because if you look at where we were this time last year, everybody was in the red. You know, what was dominating the news cycle was a number of businesses shutting down and so forth. So to see those who were able to weather the storm and report, I mean, I just looked at that. Was that 1,900% increase in other segments for Bua?
Yeah.
That's unheard of. Yeah. You know, that's very unprecedented. So I guess it also shows what's possible with resilience and just sort of figuring out how to weather the storm in this business environment. Yeah. Unique place. Nigeria is an absolutely unique place to do business. But those who stick it out, there's always something at the end of the road. It's not easy to get there, but this is true testament of that. And it's important for this to come from the private sector because, you know, when it's coming from the public sector, there's that huge trust deficit. Yeah. So that's now, speaking of public sector, of course, CBN. Yep. Those forex reserves, I know they will be picked apart as people. This has become the popular thing, is to pick these numbers apart and figure out how much is. How much are people able to calculate and correlate this with their own mathematics at home is where we are now. But this is a 30% increase, which is, if you're sitting at a 20%, that's already commendable. So 30% increase, but we want to pick this apart and really understand what lies beneath it. Yes, monetary policy being commended for this, but we still need to pick it apart and dissect it.
Gotcha.
Okay, the big story today is that today is Liberation Day.
Yes, sir.
And that's where you started from, as Trump describes it. Now we have seen tariffs on steel, aluminum, on automobiles, and then today, President Trump says he's going to roll out reciprocal tariffs. There are three major unknowns. How big would the tariffs be? Some analysts have said this will be within the range of about 20%. May not be as terrible as we expect. The second thing is that what impact are we likely to have? The third point, which you also made, is that this will be focusing on countries, not sectors, but which countries? That's it. You know, there's been a lot of talk about Besant, talking about the dirty 15, those countries that have 15% of exports into the United States. But what we know is the analysis that Jim Cramer was making, that one, this is not likely to lead to increase in domestic jobs. Two, this is going to affect relationships with traditional, allies, trading partners of the United States, particularly Mexico and Canada. Three, who is going to collect the tariffs? With immigration and customs so busy with IC operations. And four, that the average American is interested in inflation, not necessarily tariffs.
Exactly.
Because what is likely to happen is that before now, the economy, the United States economy, is going to have a lot of issues in terms of inflation and all of that. And talking about inflation, Eurostat reported just this morning that inflation in the European Union has gone down to about 2.2%. Yep. Core inflation is at 2.4%. The indication is that we're likely to see rate cut in the next meeting of the European Central Bank. ECB. And finally, gold is doing well.
Your favorite commodity.
In the last 24 hours, there's been a rush towards gold as a safe haven. Spot gold increased by about 0.2%, gold futures by about 0.3%, because once low interest rates exist and then there is uncertainty, everybody goes to gold to try and were, hedge against uncertainty.
Indeed.
But the whole issue is about the uncertainty. But we'll know the extent of it
Later
after,
today.
President Trump speaks today. Thank you very much.
Thank you. Thank you.
Rotus.